everyone. Okay, so what we're going to talk about today is lease versus buy. And we're talking usually vehicles in this situation. So here's the moral of the story. I'll get to give you the short story first, and then we'll get a little longer version. Buy. Okay, don't lease. Leasing, there's a common misconception and a myth that if you lease something, 100% of that is written off. Okay, and that is not the case. In, I would say, 95+% of the time, that is not going to be the case. It's going to be treated exactly the same as if you financed it. So if you're paying more for a lease, you don't have ownership at the end, and it's because you think you're going to get a tax write-off for that. That is the wrong decision. Okay, so talk to your accountant, make sure you're getting the proper information, and that you actually know how your taxes are going to be written off. So there's two different kinds of leases. There's an operating lease and there's a capital lease. 95% plus, in my experience, has all been capital leases. So one, does the asset transfer to the person at the end of the lease term? If it does, capital lease. Is there a bargain purchase option at the end of the lease term? So there's lots of times you buy a trailer or something like that, at the end it's $100 or $1 or something like that to actually purchase the item. Again, capital lease, and you only have to meet one of these. Okay, is the net present value of the future payments that you have equate to 90% or more of what the asset was worth when you started to lease it? And if that's the case, then again, it's a capital lease, not an operating lease. Now, capital leases are depreciated just like finances. That's why there's no difference. That's why usually there's no difference. And operating leases, yes, in fact, do go on your tax return as a complete 100% write-off. You get 100% times your tax rate. So if you're a corporation, it's 11%. So every $100 you spend, you're getting $11 in tax savings. You're still going to get tax savings with depreciation, depending on what you're purchasing. Vehicles usually 30%. Big vehicles like trucks and stuff, when we're talking about leases, usually, those are 40%, and equipment's usually 20%. So, if an asset is a vehicle, you paid $10,000 for it. 30% of that is $3,000 times your tax rate. 11%, quick math, $330 tax savings. Okay, so you're still going to have the same percentage of tax savings. It's just going to be a depreciated amount, not right off on the actual lease payments themselves. So I hope that helps. Again, talk to your accountant before you lease or buy anything. They should be happy to answer your questions and make sure you're making good financial decisions. Hope that helps. Take care of yourself, take care of your family, take care of your friends, and be well.